Folks, welcome to the Midweek Roundtable. We have my usual guest, 𝗧𝗴𝗀. He's the Senior Strategist for Joy of the Trade. My name is Roger Scott. I'm the Senior Strategist for 𝗧𝗴𝗀𝗲. Please, please, please welcome to our show. Subscribe to this channel. Follow us if you're on YouTube. We want to hear feedback from you. Jeff, how are you doing today?
I'm really good. How are you, Roger?
I'm doing great. I'm doing great. It's midweek here. It's finally, the lows are starting to get, we're starting to get weather a lot more like you guys out there, which I absolutely love. I can't get enough of it.
Heat.
I'm going to be coming out to your neck of the woods as we talked earlier this weekend. It's going to be a nice, this is a good time. This is my favorite time of the year. I'm a big summer guy.
Yeah, me too.
Yeah, I'm not a winter guy. I like the summer. I like the heat. I'll take as much humidity and heat as you can throw my way. So let's talk markets, man. It's almost like we had a crystal ball last week, right? I mean, Cathie 𝗧𝗶𝗺𝗲. Do you want to start there? Do you want to end there?
Let's start with good old Cathie.
Let's do it.
So
go ahead.
People, we have a lot of fans that are out there that like Cathie and they like us and they listen to us and they're like, how could you bash her? She's got some awesome companies. And it's like, you're not listening to what we're saying. You're not hearing us perhaps, because what we clearly said last week, and it's really truly my feeling, is that she is a very good analyst / long-term investor, and she identifies some amazing companies that I do think have humongous upside and potential. But what I think she's pretty lousy at, and I think the structure of her investment vehicle are pretty terrible at, are timing the market. And because of that, she's created this really dangerous bomb in the stock market, because she's got this overexposure and concentrated bets at very specific prices that go underwater, cause tremendous amounts of pain, and then people are going to have to puke them out in the absolute basement. She's actually, in my opinion, the way it's structured, doing a disservice at this point to a lot of those great stocks. I think, frankly, they would do better without an ARK fund.
And just to add, I couldn't agree with you more. Everything you said was 100% spot on. I just want to add a little more fuel to that. Not only is she doing people a disservice, it's almost like she doesn't have basic fundamental money management experience. She's avoiding the rules of correlation and volatility. So when she's right, she's going to be really right. When she's wrong, she's going to be really wrong. But what the problem with that, Jeff, is it's almost like, why not just buy triple leverage Nasdaq, right? I mean, look at the correlation between the two.
I have like the opposite mentality with my money link. I'm looking at correlation and I'm saying, how can I protect myself as a money manager against things I don't know?
And here's the other part, like, and you'll appreciate what I'm saying right now because you come from this background. Let's say I want to, and folks at home, pay attention to what I'm saying. You may not know that this world that I'm talking about right now exists. But let's say I'm a wealthy investor. Let's say I have a $10 billion net worth, and I come to somebody and I want to invest some money. I want to invest real money. The first thing a mutual fund guy, anyone in the world is going to do is going to take me and show me risk-adjusted returns. He's going to show me performance based on Sharpe ratio, because being a wealthy
value at risk,
right?
What's your worst day look like? How much can you? What's your biggest
Sharpe? All that stuff. So, and I'm gonna and I'm gonna take a wild guess and say that she's like on the. I mean, it's not a guess; it's a certainty because I see the volatility. She's not. Her volatility adjusted returns suck.
Can I say something just to add to that?
Please,
just a quick thing. Most people out there think like the person that made the most money in the last 12 months in just like straight return is the one that should acquire all the money. And what they don't realize is that if you took like you're saying, Roger, like these incredibly extreme bets that are incredibly binary, which could blow up in your, at some point you're going to blow up doing that because there's like mathematical probabilities, statistics. It's a guarantee probability.
The risk of ruin. The risk of ruin.
Like me and you are such geeks on this stuff. It's so funny.
Risk of ruin is not a
Kelly criterion, Roger. The Kelly criterion. If you bet black every time and you keep doubling your bet, you will have 100% zero guaranteed return. You will have zero money at some point guaranteed. And so she doesn't diversify. She makes concentrated bets. She doesn't have good drawdowns. But the problem is the size of her bets, dude, are so freaking massive. She's like tens of billions of dollars in just Tesla and like one stock. And the smaller stocks, like these small biotechs that she's down like 15% a day on, some of these stocks, she's like 25% of their float. And I'm thinking to myself, I'm like, and this has been happening. She's been getting killed while people have still been buying, for the most part, before like this week, buying the stock market and her fund. She's been getting liquidity coming into her fund and losing money. So what's going to happen when people look at their, they look in hindsight, they look at
at the end of the quarter,
when they look at their portfolio and they're like, market's at all-time highs. How am I down 30%? What the hell? Then we're like, I don't need that anymore. Boom, sell. And that creates a worse cascade of violence, but we should move on from that.
No, you're absolutely right. She's now either at the 200 or below the 200-day, while the Nasdaq is just breaking the 50. And folks at home, again, what Jeff and I are trying to say is this: please, please, please don't throw the baby out of the bathwater. She is very good at picking really good names. But everything else she does is it's just.
There are shrewd ass guys at banks right now that are saying, what's our exposure to Cathie? What can we short that she's long that will cause her pain that we can create our own extra delta on and mitigate some of our losses? So it becomes kind of becomes like a backwards GameStop thing, like a vicious circle versus a virtual circle. They did the same thing with this Hlaeng guy when he blew up. And those people were like, Bill Hwang's hedge fund and Cathie Woods were like in cahoots, which is different story for another day.
But again, I want to make sure folks at home understand the logic, because I spent a lot of time harping on volatility, risk-adjusted returns, correlation, and she's just this, folks, this lesson, this drama that you're seeing with her, this playing out is the reason why you should listen to what Jeff and I say. And again, she picks great stocks, but there's so much more to running a hedge fund. You have to look at risk-adjusted returns, volatility, drawdowns, and it seems to me, unless she knows something we don't, and math was invented a long time ago, and statistics were invented a long time ago. I just don't know what it is. So I'm very
around some of those things. You just can't get around it.
You can't get around risk of ruin, and it just I don't know what the hell she's doing. But anyhow, now let's move away. I wanted people to kind of understand what why we're harping and what the big deal is. And
because it's not done. It's not.
No.
People haven't even puked her fund yet. The redemption wave hasn't happened yet, which is what makes me nervous.
No. Would you happen to know what the typical redemption period is right now on funds? Is it like a week still, or is it faster?
It's faster in ETFs.
Is it?
ETFs,
okay.
It's T+2.
They could do it. Yeah. Okay. T+2. Okay.
T+3. They get an extra day. So they'll get their requests to people selling it, and then they have to go and sell those stocks by the next day.
So if she's having big problems, we would know about it within 3 or 4 days. It wouldn't take.
I track on Bloomberg personally. Her this is like the great part of having a Bloomberg, and why it's worth its weight in gold and better than having the best assistant in the world. Whenever I get into that debate with people, I'm tracking like day by day how many shares of the ARK fund there are in the world, and they're starting to go like this. They went from 140 million to 190 million. And they're starting to come back down into the 180 millions. If you see like a real shift down to like 140, you're going to see a real puke in the ETF. And ETFs, for those of you at home that don't know this, can trade at a discount to the net asset value.
Right.
So if you get in a real horror show selling scenario, you might actually be like, and this is for people that are strictly long ARK, just pay attention to this. If you're long ARK, you might be in a situation where you have to sell your actual ETF below what the value of the stocks they own in the fund are. And that happens all the time.
It happened with the medium-term volatility when when we had the Greek debacle.
Yes, it did.
Remember the Greek debacle?
It
happened with the medium-term volatility. It crashed because we had the highest volatility for like 3 days, and then it crashed, and then
That's exactly right.
So yeah, it actually happened to us. So I'm very familiar with it, unfortunately. All right, let's move away. But this was worth talking about, because this is huge. Right. And especially right now with the Nasdaq breaking the 50-day line, and she's got 50% of her stocks in there. So let's move on and talk about the rest of the market. What are you seeing? Yeah. What are the threats, opportunities, inflation? Talk to me.
So today was incredible inflation numbers. So me and you, we've been like ultra critical of the Fed because, and I don't know if you guys read the Wall Street. I know you do, Roger, but Wall Street Journal, I'm still old school. Like read the Wall Street Journal. Like you learn a lot in there.
And Barron's every week.
Read Barron's and read the Wall Street Journal. Like just read those things. I mean, Seeking Alpha is good. There's good articles in a lot of like online publications, but some of the old school stuff. Anyways, why I like Wall Street Journals. You get guys like Stan Druckenmiller, who is like legendary hedge fund guy, George Soros's partner, broke the Bank of England with Soros. He wrote a really smart article in the Wall Street Journal yesterday. So everybody out there, go do your homework and read this article. And he was basically like, the Fed is creating a monster with inflation in the world right now. And these distortions are creating like mega asset, but like basically what we've been saying, but he said it in a much more elegant way. And this morning, the CPI number came out, and it was 4.2%.
Yep, looking at it right now. Yeah, go ahead.
What were they expecting? I know it was the biggest number.
They were expecting.
They were 2009.
They were expecting. I'm looking at it as we speak. They were expecting from 2.9 to 3.8, and they got 4.2. And on the month to month, they were expecting 0.2, and they got 0.8.
Yeah, and one crazy thing that I looked deeper into the numbers. Used cars month over month up 10% in 1 month. Used cars, 10%.
Used cars.
I'm gonna go sell my cars.
What's the deal with the used cars? Is there something are we like missing something with the?
No, but used new cars are getting expensive. Used cars are getting crazily expensive because people can't afford new car. The amount of people that can afford new cars are shrinking, so they're looking in the used car market, and the used car market is getting out of line too.
Those stocks like Carvana and CarMax, they were really hot, heating up into COVID. And now people also, probably because people want to go out more and drive around, and they need, that has something to do with it too.
Speaking of driving around, are you getting gas in Jacksonville? Or
we are, but there is concern. There is talk and concern. But yeah, to stay on this commodities topic, inflation is crazy. I mean, it's something else. It is something else. We haven't seen lumber prices, copper prices. Lumber prices are, I think, at historic highs. I think there's a bubble right now I'm hearing horror stories. I'm hearing people bribing lumber yard. I mean, I'm just hearing horror stories, like things that you've never heard about lumber.
I mean, listen, man, like the economy needs to grow, not asset prices, the economy, activity. People confuse the two things. When prices get to be totally out of line, it slows down activity. So basically, I use the analogy, the Fed was curing a heart attack, which we were having with COVID, but now they're giving us so much drugs that they're giving us a stroke. And it's like, yeah, the heart's fine, but like, I'm about to have an aneurysm. Like, calm down. You can't keep pumping it so hard. And
people are not looking for jobs. It's getting people to stay away from the job market. We talked about that.
It's stopping it's putting a real kibosh on the activity that we should be seeing. And you see it in the labor market, you see it in all sorts of stuff. Like, we should be growing stronger than we are, and more stably, with more stability. And the inflation thing, if you don't believe in it, listen, we have colleagues. We have not colleagues, but we have other people within the industry, I should say, that don't even think we're talking about it like it's the tooth fairy. I'm like, what do you mean? Like, used cars don't go up 10% 1 month to the next. Like, that's not a normal move. That's an atypical move. These kind of moves that we're seeing in copper, and they're just not normal stuff happening out there. And to deny it is like, for me, it's kind of just like,
no. I think it's impossible for people to deny it. I mean, look, folks, if you don't think inflation here, just go to your local Home Depot, and you
can think it's not going to last. Okay, I can accept that. None of us know that. That's fine.
Yeah. I think we're going to see some changes, but I think it's going to take some time. The Fed really put themselves in a corner with this one. They really, Jeff, put themselves in a corner. So in light of all of this,
yes, sir,
how do you think it's going to manifest itself in the stock market? What sectors are you looking at? What stocks are you looking at? What's your game plan right now in light of all of this?
Stock market's tough, dude. I mean, I was out there, and we have like a little watch list. We do different watch lists within 𝗲𝗶𝗱𝗲, and I like to give a bull take. I like to give a bear case for free, guys. By the way, check it out on 𝗲𝗶𝗱𝗲.com if you haven't. Please, folks. A nice little write up.
Jeff has a lot of value on there.
Little plug. But it was hard to find a bullish case other than like inflationary stuff this week, which has run so crazy that it's ripe for like a violent pullback because it's so overbought. So I still like financials. Rates are going higher. We had this big shock CPI number, and rates just started ripping higher. And financials are making money in all these conditions. The only thing that are going to stop financials from making money is if we have that aneurysm, that horrific visual that I gave, which we're still not there yet, folks, by the way. I don't want me to make people panic, but financials will be fine. And so I'm looking for low-hanging fruit like that. Retailers are still doing good.
Yes.
Oil, like you and I are, this is why we're traders and not evangelists and not ideologues and not, long-term, long-only people. How could you not look at a chart of some of these drilling names and just be like, these guys are going to explode to the upside? I was thinking, I had a secular shift into electric, which I still think plays out over the long term, electric vehicles, et cetera. But in the short term, I don't see how all these disruptions and inflation and war in the Middle East just doesn't lead to higher gas prices and more money being made by oil companies.
I'm specifically, and I'm exactly on the same note and page as you. The stocks that I'm looking at: Devon Energy, energy company; Nucor, metal company; U.S. Marathon, energy company; 𝗧𝗴𝗀𝗻𝗀, copper; Diamondback Energy, EOG Resources. So, folks at home, just to give you some names on the top of my and Jeff can give his, but mine
I got Baker Hughes,
Halliburton is up there. Yeah. Schlumberger's up there. Occidental. These are the strongest stocks in the S&P that I'm looking at right now based on my CSI scan. So this isn't discretionary. This is just mechanically. Devon, Nucor, MRO, Marathon, 𝗧𝗴𝗀𝗻𝗀, Diamondback Energy, EOG Resources, Apache. And then as far as I was just going to say, as far as retailers, let me just real quickly here. Sorry, Jeff. I'm just kind of going back and forth because I think you're right on. I think what you're saying is all I was doing is sitting here going exactly at the three things that I'm looking at. And the only thing that you mentioned that I did not was financials. But let me tell you my take on financials. And I think you may agree on this too. I like basic materials.
Yeah.
A lot. And I've been on this drum roll for 6 months now. I mean, so there's nothing, there's nothing new there. But I like, I'll be honest with you. You turned my view, and I've been telling people this all this week. You were actually the guy that turned me around on the energy market. I was still neutral, but you and Tom Busby started getting a little more bullish, and then I started. Sometimes and this is folks. This is why I love talking to Jeff, and this is why it's important to do this, because sometimes you get this idea in your head, and the idea stays in your head. The idea just stays in your head. Meanwhile, the markets are moving, but you still have that idea in your head, and then some people tell you something, and you're like, you know what? Maybe I'm missing out. And then you look at the charts, you're like, do you know what? I've missed the boat. They're totally right.
But you know what, though, Roger? And this is a good lesson for traders at home. And this is why we're traders, and why we like to be in things while they're moving. And we look for probabilities and possibilities. So in oil, people are like, well, you weren't bullish on oil when it was $55. Now you're bullish on 65. And it's like, yes, because now the likelihood that it's going to go to $80 is much higher than when it was at $55 and the chart was consolidating and it was under the 200-day moving average and the stocks were still like trudging along. Now oil is ripping. Gas is in short supply. Inflation is exploding. So like the macro case is getting better and better all the time. But the stocks in particular are still cheap relative to the commodity, which makes it an even stronger case.
Right.
Because of people like us that aren't as like nimble as traders, still stuck in that view that no, this is, oil is not going to go like gas. It's like, it's a dying thing. People, electric. While that might be true, this summer, the next 3 months, the best trade in the world might be long these energy stocks. Right.
So let me tell you what changed my mind. You put me on the, so you and Tom Busby got me kind of starting to like thinking maybe that I should revisit it. And I did. So when I did revisit it, I started looking at the continuous crude oil contract, and I realized we are now trading above last February highs, which was the catalyst that I was looking for. But when you start saying, I'm not doing it till it's there, I'm not doing it, you start thinking that it's not there when it already is.
And Baker Hughes, when we were at those highs, was $10 higher a share. It was like 35%. It's 35% cheaper than where it was.
Yeah.
We were there. So that's what I'm saying. Like, you know, I keep mentioning Baker. That's an actual trade in monthly money flow elite. So if I do 9 trades, I do 6 longs, I do 3 shorts. I've got 3 stocks and basic materials long, and 2, I think 2 retailers. So it's like, just to give you an idea, I'm not, and I'm being discretion. I have a system. It's systematic. I'm looking at volume. I'm looking at abnormal, atypical moves. And then then the art comes in, and I look at the chart, and I look at the sector.
Right.
But my exposure this month in May to like Cathie Wood stocks is like nil. I'm short DocuSign just because it's breaking down.
That 90, it's on my 90-day breakdown list, right?
So I like to be there with things that are happening good and like against things that are happening bad. I don't give myself enough credit to know how the future is going to shape up. I'm really focused on what's happening right now, today, and getting today nailed. Yeah. That's how I wake up. That's how my mindset every day is like, stop trying to be a future predictor and start really paying attention to what's happening in the market as we speak.
So in light of what you just said, and again, I like the retail sector. This morning in my video that I do every morning at 8 o'clock, the XRT was, the retail sector was the one that I focused on. And in terms of the top stocks that I'm really liking there right now, TPR, Coach, it's right at the 50-day line. I'm really liking it. Gap looks really good. L brands look really good. Those 3 are looking really.
We got Gap. Gap is one of my longs in monthly money flow.
Yeah. Would you believe that Gap has been on the same FCX, that scan, Gap and L brands and what was the other one? The other one, and Coach, they've been on there also for about 6 months now. So those trends have been really strong.
What I really love about this conversation is we end up bringing, like you mentioned earlier, bringing each other new ideas, maybe like presenting new data points that might have shifted the case.
Well, yeah, you got me looking back on energy market.
Strength. You give me more strength in my conviction, which is important.
Yeah, and you know me, I'm not just going to stroke you. I'm going to tell you exactly.
No, we disagree all the time. On stuff, on timing of stuff, and you get most of it right, and I'm usually wrong on a lot.
No.
But when we see the same thing, more times than not, it's an incredibly strong indicator of something happening or not happening.
Yeah, my big focus right now is honestly, it's like you and I have been talking all week, and we really haven't. We kind of say hi, and we said a few words about Cathie's fund this week, and that we were right pretty much. That we were like, we had a fortune, a little fortune thing last week. But anyways, the bottom line is,
take it personally. They think I don't like.
No. Of course not.
I admire her. She's tremendous.
Of course,
she's just a terrible trader. She's not good at timing the market.
No. I think she should be. Was she before? Let me ask you. Was she an analyst before this?
Yeah, she was an analyst. Yeah, she started in the business as an analyst.
She needs to get together with a math guy. With somebody who can help her control. She needs to be the idea gal, and she needs like a risk management. But
I think a lot of it is like them like tinkering with the structure of the fund. Like this is what ETFs, the way they work is every day money comes into it, and then the next day you got to take that money and buy stocks and create a basket, a unit of the ETF. And rather than like just doing it like with algorithms and just saying like, okay, let's just buy like X% of this, 5% of that, 2% of that, and just buy all the stocks that she likes. She sits there and she goes, no, today, all the money we're getting is going to be a Tesla trade. Or I really want to be long Twitter here at $65. I love this spot. And she's freaking terrible at that. Yeah, so she takes like these inordinate risks. That's why she gets underwater in a lot of these trades, because these vultures, these vampires, like guys like me, guys like you, that have all the firepower in the world, that are sitting at their investment bank, they're on the other side of these trades, and they can make sure that she's losing money on those trades.
Absolutely.
Almost right away. Right. Like she's almost always underwater within the first 24 hours.
It almost seems like she would be better by either one, going private and just doing this privately on a smaller scale, and then she can do all these things she wants to do, or getting the right guy to help,
I guarantee you there is a like tailor-made bespoke trading desk at Goldman Sachs that's a big profit center on generating alpha, screwing Cathie Wood on her bad market.
I'm almost certain that there's one in Morgan Stanley, Goldman Sachs, and Merrill Lynch as well, and Prudential.
That's a profit center. They're making billions this year
on her,
hundreds of millions of dollars.
Couldn't agree with you more. All right, before we conclude, I want to ask you something in terms of threats, opportunities. what should investors be on the lookout over the next few days? If you have to give
I'm nervous about contagion. So everything's been tech sell-off, Cathie sell-off, like tech, like high flyers, Tesla, the stay-at-home stocks. I'm nervous. If you start seeing selling I don't think you're going to see too much selling in oil or retail or financials. But if you start seeing some overbought crazy names, overbought names in some other basic materials, fertilizers, like stuff like that. And if you start seeing some weakness in the reopening, like real weakness in some reopening stuff like hotels, et cetera, I think that's going to be problematic for the stock market for the rest of May.
Agreed. And also right now, I'm not happy with what I'm seeing in the sentiment levels. We had last week we had 3 stocks, 3, 7, 8, 30 stocks making 90-day breakdowns. We have about 90. Last week we had about 400 stocks making 90-day highs. Right now we have about 80. So there's the same amount of, we're getting very choppy.
Yesterday
basically.
We had 48 stocks in the S&P 500 make 52-week lows.
Yes.
40, that's almost 10% of the S&P made 52-week lows yesterday.
Yeah.
The market's still high, which is,
but becoming more fragmented.
Becoming more fragmented, but selling, like that kind of selling, I don't know. There's two minds. There's that liquidity is constantly coming into the market, so it's got to find a home, which is true, which is why you're not having like a real breakdown. But volatility, another debate I have with people, like volatility doesn't trend, it explodes. It's always trending lower, and then it explodes
higher. Right.
It explodes. It doesn't ever trend like this, volatility. Right. Even in COVID, it was trending down. We had a violent, vicious boom, and then we started trending lower. And
it works the opposite of how stocks move. They trend up and they go down. Volatility trends down and spikes up. It's
perfectly said. That is something I'm going to spend like 8 hours thinking about that today.
Jeff, thank you very much. This was a wonderful session as usual. I can honestly spend the next 2 hours just talking to you and just watching the market with you. And maybe one day we'll do that. Maybe I'll come out there. You'll come out here. We'll just hang out.
To come up there sometime soon.
Yeah.
Vaccinated. Spend some time in the office up there.
Absolutely. We would absolutely love to have you here, and I would love to have you with me in my trade room. Folks at home, if you guys want to reach out to Jeff, and please do, we encourage this behavior. His email is Jeff at joyofthetrade.com. That's Jeff at joyofthetrade.com. My email, really quick, support@marketgeeks.com, support@marketgeeks.com. It'll get to me fast. Jeff, this was a wonderful, wonderful session. My parting notes for today is, folks, be very careful right now. Large cap techs are cooling off. There's a lot of uncertainty. Markets are getting narrower. Don't be a hero. Lower your exposure. Don't be like Cathie Woods. Okay. I think that'll be I think that's going to be the title of today's video.
Yeah. Don't go all in every time you put on a trade and have it be at that price. That's why I know she's pretty terrible at what she does. Like, do a little bit at a time, all the time. Right. Like nibble.
Yeah. Be nimble. And this is not a time to be a hero and make big convictions in the market.
Nah.
Jeff, this was a wonderful, wonderful session. Thank you so much. And I will see you next week at the same time. Bye, everyone.
Take it easy.
Bye, guys.